Welcome back to my YouTube channel, Victory Reverse Mortgage. I'm Benny Victory. Today is Sunday, the 4th of December, the fourth video that I'm making in a series of 31 videos in December. And in today's video, I wanted to attack the conversation around what I see some of the YouTube videos remarking about the reverse mortgage being a scam. And I think that's kind of a comical statement, especially when you think about the fact that the underpinnings of the reverse mortgage are based on the federal government, the HUD, Housing and Urban Development, as well as the FHA. And the fact that the program is now some 34 years old and is so strictly regulated. In fact, before you do a reverse mortgage, you're required to go through a neutral third-party counseling that determines that you understand all the options available and you're educated about the program and its features and benefits. And then once you get that certification completed, the lender themselves does a strict financial analysis to make sure that you're the right candidate and that your credit in terms of ability and willingness to pay timely for taxes and insurance is in place. So despite all of these things, I really wanted to make a video because my commitment for this 31 days of videos in December challenge was to take the hardest subjects, or the challenge was to address each topic that I thought was significant enough. And this idea of a scam, especially when it comes to seniors, I think is really important to address. So the starting point when we use any kind of a term is to be able to define it. And it's not any different with this. So what does a scam mean? Well, according to the Webster's Dictionary, a scam is a fraudulent or deceptive act or operation. So now we need to define what fraudulent or deceptive means. And the definition that it states is to cause someone to accept as true or valid what is otherwise false or invalid. So I'll repeat that again. To cause someone to accept as true or valid what is otherwise false or invalid. So what the conversation now becomes, and I just picked 5 features that I think are the most obvious and 5 things that people seem to have misconceptions about when it comes to reverse mortgages. And I want to go over it, and there's an opportunity with each one of these to compare them to a traditional mortgage that you may have and to see which one is a better option. In fact, there was a case study done where they took the words reverse mortgage off the features and benefits of what a reverse mortgage provides seniors. And when they described the features and benefits on every instance of describing the property, the value, the features and benefits, the recipients in the study said, boy, that's a great feature to have. We would love to have that in our mortgage because we don't have it. And it wasn't until they found out that it's a reverse mortgage that their impressions changed. So it's almost like if you don't tell people that it's a reverse mortgage, they think it's a fantastic option. But once they find out the label, then it becomes problematic for them. But going back to the idea of this whole scam, so I wrote down 5 things and I want to read them and we'll discuss each one. And I want to know which one of these statements is false or invalid regarding a reverse mortgage. In other words, what am I lying about? And the first point is that there is no monthly mortgage required with a reverse mortgage. And that's the most obvious and the biggest feature and benefit of getting a reverse mortgage. In fact, that's why seniors get the reverse mortgage. It's because of the fact that they're not obligated to pay monthly mortgage payments. And as long as you are paying property taxes, homeowners insurance, and you're maintaining the property, that is all you're required to do. And that's the same obligation that you have if you have a traditional mortgage or if you don't even have a mortgage on your property, because all of those are something that is mandatory. And so there's nothing false here and there's no scam here. You're allowed to use the reverse mortgage to tap into your housing wealth, which is a portion of your homeowner's appreciation. And based on that, no more monthly mortgage payments are required, and you're only obligated to maintain the property, pay property taxes, and provide insurance on the property. The second one is that the line of credit with a reverse mortgage cannot be reduced, frozen, or closed by the lender. And that's 100% true. And that's, again, one of these huge benefits that a reverse mortgage provides that a traditional mortgage does not. In fact, if you go deeper to this idea, the traditional line of credit or a HELOC has a 10-year interest-only payment. And after the first 10 years, the second 15 years, the borrower is obligated to pay principal and interest payments. But that's not the case with a reverse mortgage, because payments are, again, not mandatory. They're optional if you choose to do it. The other benefit of the reverse mortgage is this idea that regardless of your future home values declining, there's never a situation where once the line of credit has been established, there's a chance with the lender coming back and reevaluating the conversation of how much money you should have in your available line of credit. That's not the same with your traditional mortgage. If property values go down like they did in 2008, and to some extent what we see now, and in fact, a lot of the lenders that were providing home equity loans right now in 2022 are no longer providing them. And that has to do with the lenders' concern that housing depreciation of values can jeopardize the bank's ability to come back and recapture the money if the borrower is not able to pay. And both of these features that I just stated for the reverse mortgage give significant and considerable flexibility to the senior, which is something that is the reason to get the reverse mortgage. Within the line of credit conversation for reverse mortgages is an extremely beneficial feature, which has to do with the unused line of credit that you get with the reverse mortgage. When it's just sitting there doing nothing, it's actually increasing. And through this increase, you'll be able to have more borrowing power down the road when you need it. And that's not an option that you have available, and certainly not a conversation you're going to have when you have a HELOC. So that's one more reason, one more benefit to look at considering getting a reverse mortgage. The third thing that I want to talk about is with the reverse mortgage being a non-recourse loan. Now, what that means and the benefit to you has to do with the aspect that if home values come down, and we've discussed in past videos that home equity or housing wealth or home appreciation, you don't have any control over any aspect of how much your property value appreciates or depreciates. If you have a current forward mortgage, you continue making monthly mortgage payments and you're minimally reducing your principal balance. But the big chunk of equity that you're counting on, that you look at, comes through housing appreciation through years of ownership and property values increasing. That's in essence when you bought your house for $300,000 and 10 years later the property value is $750,000. Your reduction of loan balance didn't attribute to the property appreciating $350,000, $400,000 over the course of the coming years. So when you look at the fact that with a reverse mortgage, you get to have a portion of the equity appreciation made available to you, And if home values go down and you stay in the property in such a long time that there's actually an inverse relationship to each other, which is what they call short sale situation, which is what we had in 2008 to 2012, then the homeowner or their estate don't have any liability for that. But that's not the same as if you have a traditional forward mortgage. In other words, even though you're making mortgage payments, you may be in a situation like, again, in 2008 to 2012, where even though you were making monthly mortgage payments, housing value depreciation was greater than how much you had in terms of equity. So you were upside down. And that fact of being upside down made it so that the bank could come after the person individually or their estate to collect the difference. But because a reverse mortgage is a non-recourse loan, that's never on the table, and the lender will always get their money if they're upside down through a short sale from the mortgage insurance premium, which is basically a form of insurance that was available and purchased upfront when the reverse mortgage was originated. The last point that I want to make, as far as one of the things that people think is a scam, has to do with the idea that the owner, the borrower, they're going to be off title to the property. And again, on this topic and all the topics I just discussed, I've done individual videos, sometimes more than one, discovering and discussing different aspects of it. And this borrower being off title is not something that has happened and doesn't happen. And if you think about it, it's the same idea as a traditional forward mortgage, which the lender is using the property as collateral. And because they are using it as collateral, they are lending to the collateral. And you being on title is not a problem. So all of these 5 points that I went over, if you look at what we started with, which is which of these statements is false or invalid regarding a reverse mortgage, none of them are. Every one of them that we went through fairly briefly has to do with the fact that it's the truth and it's the reality of what the benefit and features of a reverse mortgage are. In fact, more so than what a traditional forward mortgage is, which is why, again, both HUD and FHA supervise it, regulate it, and the banks get to lend on it. Now, if you're concerned about, and you say, well, the aspects of the loan's negative amortization feature or possibility of housing depreciation going to a point where there's absolutely no benefit for inheritance, and those are what you consider scams, those are not scams. Those are different aspects of the loan. And if you really are concerned about and want to learn more about that, I've done a really extensive deep dive that I'll link to the video in the description. And that video was something that I did in response to one client or one viewer's concern over the same thing, the negative amortization, equity loss, the value of even doing a reverse mortgage. And that video turned out to be something that is kind of a inclusive A to Z answering all of these questions. And if this is really a concern for you and something that is keeping you from taking advantage and looking forward to what a reverse mortgage can provide for you, I would invite you to take a look at that, and it would really help you. If at that point you still have some hesitation or concerns or questions, reach out to me. So in closing, in today's video, Sunday, is again, I want to ask you to share this video if you have access to professionals such as financial advisors, estate planning attorneys, and CPAs, and reach out to me and connect with me on the LinkedIn. It's under my name, Benny Victory, and let us see what we can do to network together and help each other, and most of all, help our seniors. Every day when I speak to seniors and have conversations, I see more and more that the need for the collective community that we have, whether it's financial advisors, CPAs, estate planning attorneys, that we need to come together, help each other to help the seniors, because they are the most vulnerable group of our ecosystem that we need to help. And through helping them and through the opportunities that we have in educating them and referring the different features and benefits of them having an estate plan and avoiding probate, having good financial analysis in place, and being in a different tax bracket, so that by having to withdraw money from their investments, they don't inadvertently move their tax bracket and be taxed on their Social Security, which, if you think about it, is just such an absurd idea. You're getting double taxed. They taxed once on Social Security, and now if they're on a different tax bracket because they need money to live on, they're going to be retaxed. So just a line of credit feature available with a reverse mortgage, where the senior could use the line of credit instead of tapping into their investments to keep them from changing tax brackets, is significant. And that's something that they may not know otherwise, unless they talk to a financial advisor or their CPA. And that's why it's important for us in this ecosystem, in the helping seniors community, that we come together and we use the opportunity to feel more comfortable about, especially the reverse mortgage. And, to that end, if I can help out, or if there's information that I can provide, or if there's information that you need to learn about or are interested in learning, or for me to do a video, reach out. I'll be happy to do it. Other than that, I thank you for watching, this being the fourth day on my 4th day challenge of my 31-day video. And look forward to seeing you on the next one tomorrow. Thank you very much. Have a good night, and God bless you, and thank you for being my client. Bye-bye.